Well, we do want to highlight some gains that we are seeing outside of your typical markets. We're not talking about the U.S., we're not talking about Europe, even the standard BRICS that so many people watch right now, because the correlations are getting closer and closer between the developed markets and the BRICS. We're looking for high-risk, high-return opportunities here, and that's why we're turning to Andrew Howell of Citi. Thank you so much for joining us. You've got a surprising pick here. You're seeing opportunities in Kazakhstan.
That's right.
Tell me about that.
Yeah, now for something a little bit different, right?
Right.
Well, the frontier markets, it's a relatively new investment concept. We've had for a long time developed markets, emerging markets discrepancy, but the frontier markets is a concept that really came up over the last few years, really because the emerging markets themselves have grown to be quite large, and there's a search now for smaller, again, higher return markets to get exposure to. The interesting thing about frontier markets is there was very little bounce last year, so although a lot of risky assets did very well, you had a group of the smaller markets which were kind of ignored and left behind. We think there's a good opportunity now to really for these to play catch up on the lost gains from last year.
Well, we're looking at pictures of Kazakhstan there. Also, the little factoid there that they're one of the 13th largest oil exporters out there, but big partners here on the trade front with China and with Russia. So is this a way to also play those broader BRICS?
In a way, I think that's right. I mean, you look at a number of these countries do have a lot of natural resources, whether it's oil, whether it's minerals, and Kazakhstan has a lot of those. The other thing these countries don't have is a lot of debt. I mean, with all these concerns we're hearing about sovereign debt issues, there's actually not a whole lot of a debt problem within a lot of these smaller frontier markets, simply because they were never allowed to borrow in large amounts. And those big oil producers like Kazakhstan or Nigeria have been able to pay off a lot of the debt which they had accumulated in the past. And so they're actually in a quite surprisingly good position, because you hear, think these small countries higher risk, but actually they don't have the same type of risks that are being faced right now by some of your large developed countries.
You just highlighted Nigeria there as well. We're looking, their benchmark index is down just slightly on the year. But again, the story seems to be circulating around commodities. They're the 10th biggest oil exporter in the world. So when you look at a global recovery, it seems that these frontiers aren't necessarily going to be moving independently.
No, I mean, they're definitely dependent upon some traction forming in global economic recovery.
I would imagine there's some correlation there. I mean, since they are smaller, since they are less liquid, are they that much more vulnerable to risks?
I think if you believe in a double dip scenario, a deep economic recession now coming back in the world, I think you probably would worry about these smaller countries. You also worry about a major decline in global capital flows, because they are supported by capital. However, the fact is right now we're looking at very low global interest rates remaining in place well to the end of this year and beyond. And I think that is going to be supportive. Overall, our view is that we're going to see a steady, although very slow, improvement in the global economic outlook. And so that is a situation in which these frontier markets, which lag significantly, they also have derated quite a bit. So their valuations right now are surprisingly low compared with the emerging markets, which did so well last year. It's quite a good entry point into what is structurally longer term of still a very attractive story.
Valuations certainly are low. You're also looking at Croatia, which is sort of a brick in the backyard of Europe,
that's
you
right.
could call it.
Yeah, that's right. I mean, you have the larger of the emerging European countries, places like Poland and Hungary, which have done quite well on the rebound. Then you've got the more frontier European places, such as Croatia, also Romania, which have lagged a bit. And valuations have gotten a bit more interesting. They're less liquid markets, so they're not as easy to invest for global investors. However, if you're willing to stray a bit beyond the path there, I think there are some very interesting opportunities.
So if you are going to put money to work there, what are you going to buy?
Well, we can't talk about individual names. So I think.
But where are you seeing growth? I mean, Croatia seems to be a very different story than the commodity-dependent frontiers of Nigeria and of Kazakhstan. So what growth within the market
I think financials, which is a very important part of many of these smaller frontier-type markets, is usually going to be your first place to start, because generally one of the attractions of these type of frontier markets is relatively underpenetrated banking systems. Credit is usually quite small as a percentage of overall economy, and so as we start to see these economies do much better this year compared with the last couple of years, which have been quite tough, I think you will see the financial systems be in a position to start lending again. You're going to see credit overall environment improve, and that's going to be quite good for financials. So I think that's the your main focus. And then in those more commodity-driven economies, such as Kazakhstan, and Nigeria, then you're going to start to look at the oil and your mining sector.
Thank you so much, Andrew.